really important to do as much due diligence as you possibly can. It's important to have relationships established with the quality companies already, with the quality management teams, and I've done that. I've been in this sector for 20 years now, and I've developed a lot of great relationships with the serially successful management teams, the guys that I trust, the guys that I know do work. And I do a lot of research and a lot of work to sift through all these companies, because let's face it, I mean, 85 to 90% of them really aren't worth investing in.
Switch towards a life of financial freedom. The Load Wallet helps you make the right switch by giving you access to a more reliable, inflation-resistant money you can trust. Money backed by silver and gold that empowers your businesses to eliminate expensive fees and settle payments instantly, and preserves your wealth for generations to come. Take back control. Download the Load Wallet today and begin building your honest money portfolio.
Welcome back to Inside the Markets, flagship podcast at stockpulse.com. And joining me today, I've got David Erfle. He is the junior miner junkie. David's been quite a while since we've connected here. I missed you at the Silver Symposium again. I guess you do have a life on top of this, so I can't really fault you for that. But good to connect here. And what better time to connect here? We've got a yo-yo going on in the metals here. So David, good to see you.
Good to see you too, Rob. Thanks again for having me on. Yeah, I'm not real happy I missed those Silver Summits either. But life really does get in the way when you have a 9-year-old running around.
Yeah. Well, I guess you've seen what I've seen here. I think one of our message we shared, you might have smelled a little bit of a bottom here. Metal's been getting just beat up here. Couple of good days here as we speak today. A little bit of a rally. Probably won't see this for a few days, but either way, I think we're both seeing some positive vibes. But all the writing's on the wall here, what the Fed intends to do. So I guess how do you see things through your eyes?
Yeah, it's really interesting what's happening in the metals markets. Yet again, we have another bear trap reversal. It seems to have caught most everybody on the wrong side of the boat. It happens every time. We have these really long, drawn out corrections. And sometimes they can be brutal. It's my favorite David Morgan saying is the sector either scares you out or wears you out. Well, it wore us out for a couple of years, and then it tried to scare us all out at the end of that. And we usually have it bottoms with a false move. We have a bottom with a false move usually, and this is shaping up to be possibly another false move bottom, where we had a bear trap reversal in the gold price, where it reversed $100 in over the past 5-6 sessions. It got down to 1620, broke that 1675 Maginot line that everybody was looking at. And myself included, I thought, all these stops were going to get ran and gold was probably going to go down to 1550, and here we go. But most of those stops were eaten up by a lot of smart money that was waiting to buy cheap gold, and we had a strong reversal, and we had a monthly close right below and a quarterly close right below 1700, and kind of what tipped off the action this week from last week was on the last day of the week, last Friday, the gold price was up a meager 1%, and the GDXJ was up 9%. And also, silver did not confirm the lower low in the gold price. The gold price made a fresh 52-week low, and silver did not confirm that. And the miners in silver usually are a hat tip to what's going to take place with the gold price in both directions. And that's definitely what's been going on here. And you look at that gold-silver ratio, it's sunk like a rock, which is very bullish. It's gotten down toward that 80 level, which is where we want to see it. We don't want to see it above 90. That's when when the sector is bearish, people are selling and it's getting really ugly. When it gets below 80, that's when momentum traders come back in, and that's a very closely followed ratio is that gold silver ratio. And another ratio to keep an eye on is the gold to S&P ratio. That bottomed the day that the stock market topped, in the first week of January. It has been going higher. So what you're seeing here is gold is finally becoming a crisis hedge. And basically what's been taking place the last week or so has been short coverage. I mean, these shorts getting burned, that happens every time. They get leveraged up too far on the wrong side of the boat, and then just a small spark, and they have to cover. And this wasn't a small spark, it was a pretty big spark, because you had the Bank of England come out and do an about face. This new administration that's been there less than a month, that what they're doing is they're continuing to raise interest rates, and then they announced that they're going to have to buy securities and do QE at the same time, which is a bit crazy. And the gold is sniffing this out, that people are starting to lose faith in these central banks, telling us that inflation was transitory for months, and then all of a sudden raising interest rates at the fastest pace in 40 years because inflation's risen at the fastest pace in 40 years. So, gold is really sniffing this out here, and it's finally starting to get interesting again in our sector.
Yeah, so let's assume the worm maybe has turned here. We spent a lot of time in the junior mining resource sector here, and it's been pretty beat to hell. Yeah, I guess paint the picture there. Obviously, if the metals start going in a good direction, but you've got other metals that are doing pretty good here too. So I give the overall sector a grade here.
Yeah, I mean, it's pretty much been an F for the past 6 months, as the gold price has gone down 6 consecutive months, and we've had the GDX cut in half from its peak in August of 2020. We've had the GDXJ beat even harder, down to levels not seen since gold was trading at $1,300 an ounce. So we had a combination of the gold price consolidating in a $400 range, between $1,700 and $2,000 an ounce for 2 years, while everything to get the gold out of the ground, to explore for the gold, to build the gold mines, everything associated with that the costs were going up exponentially. So why did people want to own juniors at that time? And so they were sold with reckless abandon. And it always happens in this sector. It goes too far to the upside. It always runs too far to the upside, and then does the exact opposite when the pendulum starts to swing the other way. It runs too far to the downside. So now you could basically take your time and accumulate quality companies at bargain basement levels. And that's what I've been doing for the past few months. I went to a large cash position about 4 or 5 months ago, and I even shorted the stock market in mid-August, and covered the rest of that short this week, and did really, really well with it, and it built up my cash position even more to accumulate these juniors that are just at fire sale prices. I mean, I went to the Beaver Creek conference to catch up with all the companies that I'm invested in recently. Which ones am I going to sell for tax loss? Which ones am I going to add to? A couple I went ahead and cut loose, but all the other ones, management teams are doing all the right things. They can't control the gold price. They can't control retail continuing to sell their stock. All they could do is continue to de-risk their project, continue to raise capital at the right time, continue to back off. If the sector gets really depressed like it is now, back off on the drill programs, make sure they conserve cash, cut down on their G&A. And, the quality companies, they've been through this before. They know how the cycle works. They raise money when their stock runs, 8 to 10 times in an up leg. They raise a bunch of cash, and they have access to capital. They're de-risking quality projects. They're in top tier jurisdictions. They've got a district scale size land package. It takes time to de-risk these things, and people really lose patience quickly in this market, and it creates opportunity, and the opportunity is right now.
Yeah, let's talk about finding those opportunities. You're doing some treasure hunting, I guess, in your own respects, and we're launching a reality show, hunting hidden treasures that you'll be a part of here. We'll shoot in several jurisdictions, but you're heading to Mexico next week. Talk about what area you're going to, who you're visiting, and what you're looking to find.
Yeah, I'm going to the Mazatlan area. I'm going to see two companies whose projects are nearby each other. I'm a shareholder in both companies, and I cover both stocks in my newsletter. The first one I'm going to see is the Discovery Silver's Cordero project. It's massive. A billion ounces of silver equivalent total. The company has 60 million cash. It was one of the companies at Beaver Creek that really wasn't very depressed because they've got all this cash, and they've got a fantastic project that they're de-risking. And then the other one I'm seeing is Vizsla Silver's Panuco project, and that is very high grade, and that looks like a very exciting project. I'm really looking forward to seeing both. I mean, it's interesting. If I'm sure that Vizsla would maybe sacrifice some of their grade for Discovery's cash, because Discovery's project is lower grade, but Vizsla's project is very high grade, and they have more. I think they've even got a mill on the property. So it's going to be really exciting and interesting to see both of these projects.
Yeah, let's talk about, I guess, heading into the end of the year here, and then getting out of the gate here. How do you expect? You're gonna have some tax loss selling come in here. Hard to believe you could sell these things off any more than they are. But paint a picture toward the end of the year for any prospective investors or anyone who wants to maybe average down and then take another shot here. Are we on the precipice here, David?
Yeah, there's a level I'm looking at in the GDXJ to get above, and that's $35. I think we get a close above $35, and that raises the odds considerably that we've got a bottom in the sector. But most of the tax loss selling has already been completed. As far as Canadian laws are concerned, these charity flow through financings, you might see some more tax loss selling from those at the end of the year. And quite frankly, a lot of people don't understand the tax loss laws. They think that they have to wait till December to sell their stocks for tax loss. So there will be some tax loss selling, absolutely. But I think most of it's already completed. I've already done all of my tax loss sales. So, yeah, I mean, that's really difficult to gauge. But I think there's a base case that we can look at, a comparison that we can look at, and that is late 2018. Late 2018 was basically when we had the same situation in the commitment of traders report as we had recently. We had the commercials net long, and we had the small speculators largely net short. And, whenever you see that situation, and also open interest was really low, whenever you see that situation, you see a big short covering move. And we're seeing that right now. And the last time that took place was in late 2018. And you didn't see much tax loss selling that year because you had the same situation where you had the gold price down 6 consecutive months into that bottom. And most of the tax loss selling was completed. So I think we might have the same situation here where most of the tax loss selling is completed. And by the way, and that was when the gold price was trading around 1,200, and then the gold price by August of 2020 was over $800 higher. I'm not saying that's going to happen again, but that's the last time we had a commitment of traders situation like this, and that's the last time we had the gold price go down 6 consecutive months.
So if you're talking to these CEOs here, what's the vibe? Are they generally pretty positive, or are they a little skittish? Have they been through this before? Hoarding capital is it's a tough market. So
it is.
Yeah. What'd you take on vibe wise?
Well, it depends on their financial situation mostly. If you're an earlier stage company and you didn't raise capital prior to the capital markets tightening up, you're a little nervous right now. You're trying to keep the lights on it. And if you see a small, $1 million raise or less from an early stage company, that's just to keep the lights on raise, and that's a warning sign. So companies like that, they weren't as upbeat as the companies that did the right things, that had a war chest. They raised capital at the right time. There was some bought deals finally that took place, in and around the conference. I think before the conference, there was maybe a total of 3 bought deals in the past 4 months. And then while the conference was going on, we had 3 bought deals announced. And Marathon Gold was the largest one. I am a shareholder. I recently purchased that stock back. And I think the general feeling was maybe that bought deal took away a lot of the money for the other juniors. That was a large one. But we need to see the capital markets start to loosen up even more here before these companies start to move. And I think it's probably going to take the gold price getting back over $1,800 to do that. And another thing I'm watching for generalist investors to finally come back into our sector after being scared away is if you watch the chart of the largest gold mining company, which is Newmont Gold. It hit an all-time high about 5 months ago, and then it corrected over 53%. So, you're a generalist investor and, you're looking to get into the gold sector. The first company you're going to look at is Newmont. And if Newmont's trading like a penny stock, penny junior, you're not going to come into the sector. So Newmont broke down at $52. It's trading around 44, 45 right now. I think it needs to get back above 52 and stabilize before we get generalist investors interested in this sector.
So I'll leave you with this here, David. This sector is very important to survival, obviously with infrastructure and all that. But at the same time, the winners are few and far between. So I guess this kind of sets up for a plug for your operation here is how would you possibly know what companies are close and not without having a true guru? So I guess spend the time and talk about how important the sector is and then how important you are.
Yeah, it's really important to do as much due diligence as you possibly can. It's important to have relationships established with the quality companies already, with the quality management teams. And I've done that. I've been in this sector for 20 years now, and I've developed a lot of great relationships with the serially successful management teams, the guys that I trust, the guys that I know good work. And, I do a lot of research and a lot of work to sift through all these companies because let's face it, 85 to 90% of them aren't worth investing in. And when we have these bear markets, we always think that, hey, the good thing that maybe is going to come out of this brutal bear market is some of these lifestyle juniors are going to go away. Well, it never happens. And it doesn't seem to have really happened this time either. The market starts to pop and all of a sudden everything starts to get financed again. So you really have to do your due diligence, and I do that. And, I keep a good contact feed with all these companies. They're just an email away. They always answer my emails right away. If a subscriber has a question about something, I send it to them and they get back to me right away. So, it's these lines of communication to have with these companies are so important, and it's also important to go to these conferences and have these one-on-one meetings with them in person. Having Zoom meetings are great, but, you don't really get a good feel for what's going on with the company until you can maybe get them at a reception after you have a few drinks in them, and then you maybe find out some information that maybe you shouldn't know, and that helps. But not saying that these companies do that, but every once in a while it might happen. And of course, I never pass along this information. I never pass along this information publicly, but it could happen. So it's always good to establish relationships anyway, with anything you invest in, and especially in this sector. It's so tough to have these big winners. They happen rarely, these 10, 20 baggers. All you need is one or two of them and you're set. You've done really well in this sector. And unfortunately, that's happened to me a few times. And the way to set yourself up for that is to put yourself in the position to be that lucky. And to do that, you need to establish relationships with these companies and that.
Yeah, I don't think anyone could deny we're on the edge of probably continuing the bull market here in all commodities here after a little turbulence. So, what's the best way to keep track of you, David?
Well, every Friday, I usually put out a weekly column in Kitco. That's www.kitco.com. And then my website is www.juniorminerjunkie.com. You can find me there.
Well, let's appreciate the insight here, and hopefully see you at the Silver Symposium. And I look forward to see you on a Hunting Hidden Treasure tour there in Nevada. So, David Erfle, Junior Miner Junkie, appreciate your time as always.
Thank you. Always great to talk to you.